The Reserve Bank has delivered its fourth interest rate cut of the year. It's reduced the repo rate by 25 basis points to 6.75%. The decision was unanimous. The move comes amid a downside surprise in October's inflation data and a significant shift in the country's monetary policy framework following the formal adoption of a 3% inflation target. The bank has revised its inflation outlook downward from 3.4% to 3.3% in 2025 and 3.6% to 3.5% in 2026. South Africa has pushed back against U.S. attempts to influence this weekend's G20 Leaders Summit in Johannesburg, saying Washington cannot demand a say after choosing not to attend. The presidency has confirmed it received a diplomatic note from the U.S. warning Pretoria not to issue a G20 declaration without American agreement. But President Cyril Ramaphosa's office says Donald Trump forfeited his right to shape discussions by refusing to participate. Presidential spokesperson Vincent Makwenya says South Africa will honor the G20 process and not obsess over one country, stressing that the summit represents the collective voice of 20 nations plus the EU and AU. It remains unclear whether leaders will reach consensus on a declaration in the US's absence, but negotiations continue as Sherpas work to secure an agreement before the summit ends. Investec has delivered resilient half-year results despite a volatile global economy. The financial services group has reported a 2.5% rise in adjusted earnings per share. And this was supported by strong client activity, growth in lending, and continued inflows into its wealth business. Operating profit dipped slightly, but the firm's credit loss ratio improved to 35 basis points, well within target. The bank has increased its interim dividend to 17.5 pence and says strong capital generation puts it on track to meet its long-term goal of lifting return on equity toward the upper end of its target range by 2030. Investors in Mr. Price have bagged a healthy payout. The retailer has declared an interim dividend of R3.23, reflecting growth of 6.5%. That's after the firm ended its first half debt-free and holding R3 billion in cash. In the 6 months to end September, revenue rose 5.4%, while headline earnings per share increased 6.5%, helped by tight cost control and improved margins. CEO Mark Blair says the results reflect a disciplined execution in a market where consumer budgets remained under pressure. Mr. Price has indicated that it will continue investing in expansion despite the fragile retail environment. Lewis has reported a sharp rise in sales and profits. That's thanks to its most aggressive store expansion yet. The group opened 40 new stores in the first half of its financial year, the highest in any 6-month period, pushing its footprint to 958 outlets and helping merchandise sales rise 6.7% to R2.5 billion. Total revenue grew 11%, while headline earnings jumped 16%. Lewis also lifted its interim dividend 12% to R3.37. The group has warned that consumers remain under pressure, but says strong stock levels and promotional campaigns position it well for Black Friday and the festive season. Reinet has delivered a better second half to its 2025 financial year, helping soften earlier losses. Our results show revenue from continuing operations down 2%, with operating profit 8% lower. Headline earnings per share slipped 5%, but the group generated R1.1 billion in free cash flow, boosting its net cash position and supporting a higher final dividend of R2.93 per share. The company has also announced a major leadership transition. After nearly 12 years at the helm, Alan Dixon will hand over as Group CEO on the 1st of March 2026, staying on to support a managed handover. He will be succeeded by Anthony De Beer, who joins the group in February. Delta Property Fund has reported a surge in half-year profit to just over 50 million rands. That's almost double last year's amount. Collections were flawless at 100%, vacancies eased to 29.7%, and debt levels continued to edge down, strengthening the balance sheet. Interest cover improved to 1.5 times as finance costs fell, while the loan-to-value ratio tightened to 58.4%. Net asset value held steady at R3.50 per share. No interim dividend has been declared, but Delta says momentum is building, driven by disposals, cost cuts and stronger leasing as the group pushes toward a leaner, more profitable platform. Netcare says it expects a strong jump in annual earnings when it reports full-year results later this month. According to the 2A trading update, the hospital group's headline earnings per share are seen rising by as much as 20%. The company attributes the stronger performance to increased activity, improved operational efficiencies, lower interest rates and savings from its digitization drive, as well as the positive impact of its share buyback program. Nedbank will release its audited results on the 24th of November. City Lodge says improving economic conditions and stronger business sentiment have boosted trading volumes in the first 4 months of its 2026 financial year. Group occupancy rose to 62% over the period, nearly 5 points higher than last year, with room rates tracking inflation. Performance strengthened further in November, with occupancy up to 65% and surging above 90% last night ahead of the G20 summit. Food and beverage revenue has climbed 16% so far, while the group pushes ahead with hotel refurbishments and a major tech upgrade. City Lodge has repurchased 36 million shares and expects the sale of its Arcadia property to conclude later this year. And frustration among developing nations is growing at COP30. They're accusing richer countries of backtracking on finance commitments at the heart of global climate cooperation. At the center of the dispute is Article 9.1 of the Paris Agreement. The clause makes it a legal obligation for developed nations to provide financial support for adaptation and low-carbon development in the global south. Delegations from Africa, Asia and Latin America say they're seeking clarity and want a firm definition of what counts as climate finance, predictable grants and a binding pathway to close the funding gap that continues to stall climate ambition. Earlier in the week, India led a strong push, arguing that Article 9.1 was not optional and urging COP30 to adopt a clear decision to enforce it. But while the need for a major transfer of funds to developing countries is widely acknowledged, wealthier nations are for now refusing to shift their position.
The fact of the matter is that, at least for the EU side, they feel that they went as far as they possibly could, even though this was a far cry from what was the max, right? So there is no appetite to have that conversation again. So the question is, also to what degree will adaptation finance, if they manage to deliver on those demands, will that then unlock the 9.1 issue? I think that might be one of the keys, at least, to deal with that in a way that could be acceptable to all parties. But it's a heavy